Welcome to Furniture Industry News, your go-to source for the latest and most significant trends, statistics, and insights into the ever-evolving world of furniture. Whether you're a retailer, manufacturer, designer, or industry analyst, this podcast is designed to keep you up to speed with the dynamic changes and innovations shaping our industry. From consumer preferences to market fluctuations and groundbreaking designs, we'll cover all the bases, providing you with valuable information that impacts your business decisions. Join me as we delve into the intricacies of the furniture sector, explore new opportunities for growth, and navigate the challenges of our trade. So sit back, stay tuned, and let's get started on this journey together. In perhaps one of the more telling signs of economic recovery, McKinsey's latest ConsumerWise report indicates that consumer confidence has elevated to heights not seen in nearly 2 years. This uptick in confidence is crucial for industries reliant on discretionary spending, such as furniture. When consumers feel optimistic about the economy, they're more inclined to make larger purchases, such as new sofas, dining sets, and bedroom furniture that can revitalize their living spaces. The report attributes this increase in confidence to a confluence of factors. It seems the end-of-year rally in the stock market, coupled with some early signs of stabilization in prices, have bolstered consumer optimism. Additionally, labor market resilience and historically low unemployment rates ensure that consumers have faith not just in the present, but also in the prospects of a stable economic future. However, the McKinsey report does caution us by highlighting that while macroeconomic circumstances seem promising at the moment, just beneath the surface, there still lie underlying concerns among consumers. Inflation, although slightly abated from the previous quarter, remains a significant worry, with nearly half of the population citing it as a primary concern. This concern is translated starkly into intended spending patterns. According to the survey, expectations for spending on essentials like food and utilities remain steadfast. Yet when it comes to discretionary purchases such as furniture, there's an anticipated dip with 44% of consumers positing reduced spending in the sector. Only a fraction, 20%, envisage spending more. This translates into trading down behaviors that were noted across various consumer demographics. The report brings out that this trend of seeking more economical options and value for money is still prevalent. Interestingly, younger shoppers display this behavior more than their older counterparts, and it's more common among those with low to middle incomes compared to those at a higher income bracket. Of further interest, fewer consumers are reporting shifts to lower-priced retailers and brands compared to the end of last year. And while buy now, pay later services appeared to have plateaued in popularity, there's a notable decline in consumers reporting delayed purchases in the past 3 months. What does all this signify for the upcoming April market? While optimism from the consumer end is certainly welcome news, it may take some time before this is reflected in actual spending within our industry. The chart points to a cautious approach by consumers to furniture spending, a domain that typically requires some level of discretionary income. Understanding these nuances gives invaluable insight to market strategists, retailers, and manufacturers, particularly in gearing up for the design and sales strategies within the furniture space. The need for targeting consumer spending wisely, offering excellent value, and aligning with current consumer confidence levels cannot be overemphasized. It's a complex cocktail of consumer sentiment. Confidence is up, but caution remains. As always, keeping a close eye on these trends will be key to navigating the future terrain of the furniture market. Turning now to a fascinating aspect of our industry that merges interior design tendencies with consumer behavior, the quintessential style preferences dominating the high-point market. As the high-point market buzzes with activity, certain design aesthetics clearly emerge as the frontrunners appealing to this year's market attendees. An intriguing survey conducted recently, enveloping an audience mix that spans generations, ethnicities, and income brackets, has cast a light on what designs are truly resonating with consumers. It reveals that a sweeping 46% are drawn to minimalist designs. This predilection for minimalism is not particularly surprising. It aligns perfectly with a broader trend toward simplicity and mindfulness in our everyday lives, a cultural evolution reflected in our living spaces. Delving into the heart of minimalism, what does this mean for the furniture industry? Minimalism's simplicity does not equate to a lack of sophistication. Instead, it's characterized by clean lines, a cohesive color palette dominated by grays, whites, and blacks, and a strategic avoidance of unnecessary ornamentation. It's a reflection of a collective yearning for tranquility and uncluttered spaces where every furniture piece serves a purpose without compromising on style. But minimalism isn't the only style catching consumer eyes. Interestingly, modern farmhouse designs hold their own, cherished by 22% of participants. Coastal and mid-century modern styles follow closely, with 19% and 18%, respectively. These styles, each distinct in their inspiration and execution, nonetheless share an underlying preference for utility married with aesthetic charm. Furthermore, as the high point market serves as a beacon for the industry's professionals, an understanding of the consumer's evolving tastes is immensely valuable. Retailers and designers must take heed of the apparent shift toward minimalism, adjusting inventory choices and design proposals accordingly. It's not just about aesthetics. It's about capturing the essence of what the consumer sees as the ideal home environment, translating it into a tangible sales strategy. Yet, it is not only the styles people prefer, but how they wish to enact these preferences. A significant 57% of these consumers prefer to take charge of their abode's design elements, leaning into the thrill of personalizing their environment. But this isn't to cast a shadow on the irreplaceable expertise of interior designers. There's a noticeable inclination, about 6%, among particularly younger and more affluent demographics to collaborate with design professionals. So what does this imply for businesses? It points to an opportunity to blend self-directed purchasing with guided professional insight, catering to a broad spectrum of consumer needs. These preferences underscore a landscape ripe with opportunities. High Point Market's showcase ultimately becomes a canvas where consumer predilections and industry offerings intersect. This intersection is where industry professionals must pivot, adapt, and innovate to continue thriving. It's within this dynamic and ever-evolving tableau that buyers and sellers converge at the illustrious High Point Market. So, what will you take away from these consumer insights? Will you adapt to the minimalist wave sweeping across living spaces? Or will you find a balance, integrating this trend with the variety of tastes that consumers harbor? No matter the approach, it's clear that staying attuned to these preferences is pivotal in navigating the furniture market's future. Delving into the tapestry of opinions from industry heavyweights at High Point Market, it's quite evident that an undercurrent of innovation is defining the direction of product trends within the furniture domain. As professionals in this industry, you're no doubt aware that staying attuned to these trends is not just insightful, it's business critical. Take, for instance, the pronounced focus on outdoor furniture. Our insider, Lee Honigsfeld of Armin Living, underscores the burgeoning demand for designs that seamlessly transition the comfort of the indoors to the aesthetic splendor of outdoor spaces. The Vivid collection, with its resilient frames and eloquent styling fitting for both indoor and outdoor settings, is indicative of this surge in consumer desire. Split-head mattress options, as highlighted by Phil Carlitz of Bedding Industries of America, further exemplify the market's gravitation towards personalization and comfort, an echo of the adjustable base trend we've observed over recent markets. The rise in popularity for such specialized offerings illuminates the shift towards more tailored sleep solutions. In sync with this passion for customization, Hossein Azimi, CEO of Bellini Modern Living, cites the evolving architectural trend of integrating indoor and outdoor environments as a pivotal driving force. Their Maranello collection, conceived in Italy, is crafted to endure the outdoor elements while retaining the luxury of indoor furniture, merging durability with designer appeal. And it's not just about product categories, it's about surprising material combinations and form factors. For instance, Heather Eidenmiller of Bernhardt Furniture expounds upon the allure of mixed materials within upholstery, citing that consumers are craving for pieces that double as functional art within their homes. It's fascinating to observe the palpable enthusiasm for natural elements, materials that tell a story of origin and craftsmanship. Brian Burke from Howard Elliott asserts that home decor items integrating such raw materials, paired with functional ingenuity, are becoming increasingly coveted. Customers are searching for items that commendably straddle both utility and aesthetics. As we cast our gaze across these insights, it becomes increasingly apparent that the furniture market stands on the cusp of a paradigm shift, where products are not merely items of necessity, but are expressions of lifestyle and personal narrative. Forward-thinking designs that embrace this new narrative, whether through outdoor pieces that extend living spaces or through mattresses that conform to the sleeper's every contour, are vying for pole position in tomorrow's market. These observations from the pulse points of High Point Market are testimony to an industry that is not just enduring, but flourishing, constantly reinventing itself in response to the evolving tapestry of consumer needs. And that, dear professionals, is what makes the world of furniture not just a marketplace, but a canvas for creativity and innovation. As industry professionals well know, challenges and innovation go hand in hand, particularly in the resilient bedding segment. High Point Market, the pulse of home furnishings, is in spring bloom, and this season, the mattress and bedding manufacturers are unveiling an array of refreshing products designed to rejuvenate consumer interest and drive traffic to retailers. Now, despite the wider economic squeeze that has notably affected consumer spending, mattress makers are not only enduring, but are exuding a grounded optimism. They're doubling down on sustainability, a theme that has ascended from buzzword status to a genuine selling point. Companies like Schiffman Mattress Company and Paramount Sleep Company are championing the use of natural materials, sharply aligning with today's eco-conscious consumerism. Another burgeoning trend is the broadening of the accessories range. We spend a third of our lives sleeping, yet the critical role of pillows, mattress protectors, and bedding is often overlooked. Brands such as Bedgear, Magnaflex, and Maloof are infusing innovation into sleep accessories that complement the core product, the mattress. This strategy not only enhances the customer's sleep experience, but also significantly lifts the average retail ticket. Perhaps even more interesting is the strategic approach to product delivery. DreamFit has aligned itself with American Leather, complementing their sofa sleepers with a custom line of sheets. This endeavor points towards an industry that's increasingly interconnected, thinking beyond the mattress and considering the full sleep environment. But what's a bed without adjustability? The segment is witnessing sustained interest with adjustable bed bases becoming integral to modern sleep setups. Lily, for instance, has refreshed its adjustable base program with new models that boast contemporary features. The aim is twofold: to accelerate consumer excitement with innovative functionality and, of course, to sharpen the edge in retailer offerings. Messages emerging from High Point resonate with an industry affirming progression, not stagnation. The sector's drive to enhance sleep quality, its commitment to environmental sustainability, and the expansion of product assortments all contribute to a rejuvenated industry landscape. Market attendees will likely debate which trend possesses the most traction. Yet there's a common thread, a strategic pivot to not just endure an economic squeeze, but to emerge from it more robust and more in tune with consumer desire. Undoubtedly, these enterprising directions taken by the bedding industry encapsulate a deeper understanding of today's market demands. Essential needs are met with enhanced satisfaction, and product offerings are tailored to an evolving, discerning customer base. The lesson we imbibe from such adaptability is clear. The bedding segment is poised, more than ever, to ensure that even in the toughest times, comfort, innovation, and profitability can coexist and indeed flourish. The realm of short-term rentals is undergoing a revolution, fostering a lucrative niche within the furniture industry. Insight into this burgeoning market was astutely provided during the second annual Vacation Rental Design Summit, which took place in High Point. Driven by a collaboration between High Point X Design and the High Point Market Authority, this event convened just before the Spring Furniture Show, giving attendees the opportunity to merge the summit's fresh perspectives directly with market exploration. The summit attracted interior designers, property managers, and other industry players, all with eyes on the prize of transforming vacation rental spaces into something extraordinary. Across a variety of sessions, participants delved into key aspects of short-term rental projects, from ensuring the highest standards of safety and hospitality to the creatives of shoppable room concepts. This last point is pivotal, as it represents a direct bridge from aesthetically pleasing spaces to actual furniture sales. Fascinatingly, repeat attendees from the summit's inauguration last year highlighted the sector's eager appetite for continuous education and improvement, a sign that the short-term rental market is not just a passing trend, but a significant and evolving sector within the home furnishings industry. And it's not just a game of aesthetics. The summit emphasized the strategic business aspects. Jessica Deuce, co-creator of the event and a veteran in vacation rental design, highlighted that the outperformers in the short-term rental market are those investments driven by deliberate and thoughtful design. As the short-term rental market matures, designers like Deutsch are counseling property owners not just on style, but on competitive analysis, investment returns, and crafting spaces that not only appeal, but also sell. Moreover, Deutsch pointed out that despite whispers of the market peaking, the short-term rental industry is far from its zenith. Rather, a luxury, well-designed rental is the propellant for thriving success. The numbers underscore this trend, showing sustained growth. A notable voice at the summit, Terry Lee Houlace, conveyed her personal testament to the power of vacation rental design, stating that venturing into this arena significantly changed her life and career trajectory, underscoring the potent potential vested in short-term rental design. As the need for unique and engaging rental experiences swells, designers like Houlace are at the forefront, blazing the trail for meaningful transformations that captivate the market's imagination. So, what does all of this mean for our industry professionals listening in today? It's an affirmation that the short-term rental market is ripe with untapped potential. The trends indicate a growing segment of consumers desiring spaces that are not just livable but picture-perfect, spaces that they can momentarily call home and, if charmed enough, replicate elements of in their own abodes. We're observing a shift where the intersection of home furnishings and the hospitality industry is becoming ever more entwined. In essence, the summit not only served as a fount of knowledge, but as a beacon, guiding the path to novel opportunities within our industry. It accentuates the critical need for impeccable design integrated with a strategic business angle, propelling the vacation rental market to new heights and, in turn, potentially setting new trends in residential furnishing. Now, let's keep a close eye on how the insights from this summit will influence the designs we encounter at this year's High Point market. In the financial sphere, an intriguing scenario unfolded around luxury home furnishings brand RH, formerly known as Restoration Hardware. Despite a fiscal fourth-quarter revenue dip of 4.4% to $738 million and a net income fall that missed expectations by nearly $20 million, a surge in investor enthusiasm was palpable, with RH shares jumping 17% the day following its earnings call. This bounce back seems contrary to the financials, signaling that investors are looking beyond immediate figures, entrusting hope in the long-term narrative set by RH CEO Gary Friedman. Friedman, charismatic and visionary, has managed over time to build a compelling story that resonates with investors. His unabashed ambition is to position RH not just as a purveyor of upscale furnishings, but as a global powerhouse akin to the likes of LVMH or Chanel. Such aspirations have worked to instill a certain level of trust, where the market is betting on RH's strategic calls to pay off grandly. Within the details of the financial reporting, there was acknowledgement of fiscal adversity, citing severe winter storms and unforeseen shipping disruptions that undercut sales by an estimated $40 million. But it was the forecasted growth of 8% to 10% for the next fiscal year, and the promising start to RH's new outdoor furniture collection that likely fueled positive market reactions. The launch of this collection, part of a comprehensive product transformation, is seen as crucial in reclaiming market territory, particularly within the lucrative realm of outdoor living. Plus, the rollout of 30 new collections encompassing all furniture categories couldn't be timelier, poised to revitalize RH's entire product line. On the international front, the expansion is robust with RH England, RH Munich, Dusseldorf, and Brussels being recent additions, and more opulent design galleries slated for significant style capitals across the globe. It is this diversification and global footprint that RH is counting on to drive it towards staggering annual sales in the realms of $20 billion to $25 billion, competing in additional markets that stretch from hotels and hospitality to real estate. However, fulfilling such an exhaustive global endeavor comes with its financial strains. The margin drag resulting from these international investments has been predicted to continue impacting fiscal 2024, but are expected to lessen with the growth of RH's geographic reach and diversification in the market. As we digest these developments, the response to RH's situation offers us a clear reminder that in business, the narrative weaved around performance numbers is equally critical in shaping market sentiment. Investors are seemingly betting on the future, embracing the belief that RH's ambitious strategy, though currently causing some economic pain, is building towards a future that will see the brand not just recover, but reach heights hitherto unseen in the luxury home market. In today's financial segment of Furniture Industry News, we turn our attention to a significant merger that promises synergistic boosts to one of the leading players in the furniture retail space. Conn's Home Plus, a name well known among industry professionals, has added a hefty 6 weeks of W.S. Badcock Corp's business to its Q4 earnings report. This move, an alignment of two robust entities, has resulted in a notable uptick in Conn's consolidated revenue, climbing to $366.1 million, up 9.32% when compared to the same span last year. This figure propels the company's net income to a commendable $43.301 million, or $1.75 per diluted share, which reverses the prior year's Q4 loss. The merger, which came into effect on December 18, 2023, brought forth a substantial $68.4 million to Conn's revenue streams, illustrating the impacts of strategic consolidations in the market. President and CEO of Conn's, Norm Miller, highlighted the harmonized culture and the potential landscape for revenue and cost synergies, pointing out that about $50 million worth of expenses were removed during Q4. Furthermore, with an eye to the future, Miller forecasts over $50 million in additional cost synergies and comparable figures in revenue synergies over the next year and a half. This includes the integration of Conn's in-house loan product with Badcock's credit programs, bolstering e-commerce capabilities, and pursuing shared retail growth strategies. Beyond the immediate gains and the cost-saving measures, the merger's potency is obvious in its recalibration of business avenues. With realms such as credit services, e-commerce, and other retail strategies being focal points, Conn's Home Plus is looking at a horizon with significant improvements in retail sales and profitability. The transitional period post-merger is set to ingrain the necessary DNA into Conn's ecosystem to ensure robust growth and resilience against the tumults of the sector. Despite the expectation of a challenging macro environment through fiscal year 2025, Conn's is buoyed by the anticipation of these integrated strengths. In Miller's words, the merger will position the company to emerge stronger and more resilient. Conn's asserts that the collaboration is strategic, aligning with its existing initiatives to reinforce the company's footing in the market. For the year, Conn's has reported $1.238 billion in revenue, highlighting the waves made by the merger. And while the numbers exhibit a 7.81% decline from the previous fiscal year's $1.343 billion, the company remains optimistic. This optimism is supported by the fact that the merger clears a delineated path towards sustained profitability and market share expansion, even as it navigates tempestuous market conditions. As we look ahead, Conn's Home Plus and W.S. Badcock Corp stand as a merged entity, ready to set an exemplary precedent for strategic business actions. With committed leadership at the helm, industry professionals will be watching closely how these synergies unfold and how they may serve as a playbook for others, considering similar moves in the increasingly competitive furniture retail landscape. Stay with us as we will be tracking this merger's progress and its ripple effects across the sector. In a furniture industry hit by economic headwinds, the performance of Stamford, Connecticut-based Lovesac stands out, revealing a resilience and strategic prowess to be admired. With an upward surge in revenues, the company has surpassed the impressive $700 million mark for fiscal year 2024. It's achievements like these that bring a ray of hope and a dash of inspiration to an otherwise cautious sector. What's particularly noteworthy is Lovesac's ability to achieve a 7.5% revenue increase in a year, marked by significant decline for the home furnishing space. What fueled this remarkable growth? Lovesac CEO Sean Nelson points to several key drivers. The brand's authentic connection with both new and existing customers continues to strengthen, suggesting that the Lovesac brand resonates deeply with its audience. Lovesac's omni-channel strategy, their so-called infinity flywheel, showcases the power of a seamless shopping experience. This, in combination with their designed for life philosophy, propels the brand forward. Such dedication to innovation and tailored investments has shaped a platform for scaling the brand profitably, even in the most challenging of times. Amid such growth, Lovesac recorded a net income of $23.9 million, or $1.45 per diluted share for the year, a slight decrease from the previous year, but nevertheless robust against the backdrop of industry trends. With an EBITDA margin of 7.71%, Lovesac's financial health remains solid, signaling strong management and operational efficiency. The fourth quarter reflected this continuous positive momentum, with net sales climbing to $250.5 million, a testament to the brand's strategic initiatives. Here we saw Lovesac's ability to execute and monetize its core product lines, including the versatile Sactionals and delightfully comfortable Sacs, which testified to the ingenuity at the heart of Lovesac's offerings. In the year ahead, Lovesac anticipates full-year net sales to range between $700 million and $770 million, aiming for a net income of $18 million to $27 million and an adjusted EBITDA between $46 million to $60 million. Nelson confidently conveyed that Lovesac will strengthen its core platform while embarking on a clockwork of innovative product introductions aimed to enhance the Sactional and Sac collections. There's an overarching theme in Lovesac's success story: continual adaptation. In a world perpetually changing, Lovesac has managed not just to keep pace, but to set the pace in terms of product innovation, customer experience, and financial acumen. As Nelson aptly summarized, Lovesac is primed to over-participate in an eventual category rebound, pointing toward market share gains built upon their strong foundation. This fiscal year is poised to be characterized by bolstered platform enhancements and persistent advancements that keep Lovesac comfortably ahead in the race. Lovesac's commitment to genuine innovation is what has differentiated the company from the pack and will likely continue to be the driving force behind their success. As the fiscal year unwinds, all eyes will undoubtedly remain on Lovesac, watching to see how their approach evolves and how their strategies continue to transform the very landscape of the furniture industry. As we wrap up another episode of Furniture Industry News, we've traversed a landscape filled with innovative designs and strategic insights. From the optimistic surge in consumer confidence, hinting at healthier spending, to the minimalist trend dominating style preferences at High Point Market, the furniture industry continues to adapt and evolve in the face of economic challenges. We've seen the bedding segment blossom despite a squeeze in the home furnishing segment, and explored how key industry players are charting a course through new product offerings and bold expansions. The Vacation Rental Design Summit underscored the evolving needs within interior design, while financial performance analyses of major furniture retailers like RH, Conn's, and Lovesac revealed nuanced narratives of resilience and ingenuity. Each story we've shared today not only informs but also empowers you, our industry professionals, to navigate the tides of change. Stay informed, stay engaged, and above all, keep crafting the spaces where life's moments unfold. Until next time, keep tuning into Furniture Industry News for your professional guide to the pulse of our industry. Thank you for listening, and may your endeavors in furniture be as enduring and impactful as the craft itself.